Okay guys, here's what we're doing today. I'm going to show you exactly how I put in a trade when I put in a new option trade. Anyone who's ever had the question, do I use a market? Do I use a limit? What kind of order do I put in when I make the trade? You're going to have your answer today. So we're going to start with the ticker. I'm just using eTrade Pro. You can use whatever program you want. It's all the same. I'm going to put in the ticker, which is FSLR for solar, a dumb solar panel company that I'm going to be taking a short position on. We're going to add the option legs. I'm going to be using 3 of them. It doesn't matter how many you have. It's always going to be the same. I mean, the method I'm going to show you is always going to be the same. You could just take a simple 1 contract long position, and the way you enter it's going to be the same in terms of down here. Alright, so I'm going to put in specifically what I want. I want to buy a call and sell a call, and then I want to buy a put. I'm going to do a call spread, and then I'm going to go long on puts. Call spread is going to be more close because I want a higher theta value. I want that time decay to be faster because it's in my favor. I'm going to be buying a call in addition to selling a call because I want upside protection. Right here, by putting a long 37.5 call into this position, I cap my risk. So my total risk now is $300. Even if First Solar flies to the moon the next day, the most I'll ever lose through this trade is $300 based on what I've put in here to cap the losses. I'm going to be taking a credit with these $30 calls. They're going to give me about $500 for each one I sell. That's going to help me finance the trade. So right here I've got $400 profit from opening this spread, and then I'm going to use that to buy the short position, which I'm going to actually go out pretty far to buy. So I'm going to be taking the out of the money puts with a long date and 5 of those. So I'm actually going to be spending some money here because the cost of these puts overtakes the credit I gain from the spread, but that's okay. That's what I want. So here's where things get important. We have spreads that are rather not really wide. The spreads aren't that wide. Here we got a 2-cent spread. Here we have a 5-cent spread, and then of course with a option that is lower in volume, you're gonna have a wider spread. Here's a 6-cent spread. They're all about the same, not a big issue. Sometimes you'll find large spreads. It doesn't matter how big the spread is. This method works, in my experience, regardless of that spread. But at the end, you're going to have the total spread for whatever legs you put in. Here it's giving me a total spread of 1.56 and 2.23, and it's fluctuating. And what I'm going to do is I like to calculate it by hand because sometimes I find that eTrade is not exactly precise in calculating these. So I mean, I'm just going to take a quick look and mentally calculate it. Give me a second here. Alright, so I mean, I've got a good idea of what I want to do. Here's what you don't want to do. You don't want to use a market price. You want to always go with a net credit or net debit limit order. These are limit orders, and it depends if you're buying or selling. Here we're going to be spending money to open the position, so we're going with a debit. Now the lowest possible debit, the lowest possible price I could get this entire position for is $162. It's not likely, but it's worth trying, so I'm going to go ahead and put that in. I'll go up a little higher. We'll try 165 and see if this works. What exactly the answer to the question of how I enter trades is this. I put in the low ball because there's no reason not to. If it gets filled, great. You you got a lower price than you expected. Because most people who use limit orders, they calculate the midpoint and then they go immediately to that midpoint. But you can usually get a lower price by starting with the bid, and then what happens is you wait 5 minutes. If it's not filled, if the order is not filled, you go back and you do this again and you raise the price by 5 cents. That's it. There's actually no more I can say besides that. You just slowly continue raising the bid price until a certain point, and you should decide before you go through this process where you're going to hit that triggers you to stop doing this. So I think pretty much the midpoint is, I'll go a little bit above the midpoint because there's so many options, so many legs in this trade, and it's not exactly a common trade. If I was doing a simple one option call or one option put, I would stop pretty much at the midpoint. I wouldn't want to go higher than midpoint. If I hit the midpoint and it's still not filled, I'd just leave it open for the rest of the day and see if it gets filled. Otherwise, I would look for another option, perhaps an option with more volume. But for a trade like this, I'll go over the midpoint by about 15 cents max, and then I'll stop. So, I mean, I estimate that to be, what we got, 55, 60. I would say after I hit 205, I'm done. If it doesn't get filled at 205, what I'll do is I'll go back, I'll look at the contract with the lowest volume, and I'll change that one to a similar one. So let's say, for example, I find it's this short call that's having trouble. What I'll do is I'll just look for a call that is of higher volume that's pretty much the same. So I'll look at the higher strike price, and then I'll look at the lower strike price, and you can see that. For example, here, let's take the January one as an example instead. Here's the January puts. Let's say that this $25 put is having issues getting filled. Well, there's only a 16 volume, and there's 8,863 open interests. Actually, this one's pretty good. All right, let's go with a different example. Let's say that I'm going with this one right here, the $35. We only have 4 total volume. I would just move that up to the next one because there's more volume. It's going to be easier to fill. So, well, it might not because of open interest, but I mean, you experiment. Really, if you have an option strategy that's a little more complex, or even a simple option strategy, that order form disappeared. So, sorry, I can't finish the trade, but I think you got the idea. Anyway, if you have any sort of options trade, regardless of its complexity, you're going to not really be so stubborn about what that trade is. Like, moving up or down one strike price isn't going to change the trade too much. If you got something finely tuned to equal 0 in credit debit, for example, if you're selling one option and buying another and they happen to be roughly the same price, so you've essentially opened a free position, you might want to change both of those options. But for the most part, just changing one option slightly isn't going to change the trade or the profile of the trade that much, so you'll be okay. Again, sorry, the whatever that order form is, because I minimized it, disappeared. I'm going to have to reopen it. I'm not going to make you wait through that. So I'm going to end the video here. If you found this to be helpful, please well, actually, I don't care if you liked the video. Leave a comment and let me know what you liked about the video, what you disliked about it, and also leave a request for a specific video type, and I will answer all the questions that are valuable. That is, all the questions that can help more than just one person. That's it for this time. Stay tuned. Talk to you later. Love you guys.